Ken, you've listened to the reporters. We have these breaking headlines that we believe, according to our sources, that the ECB will leave the liquidity unchanged to the Greek banks. What's it going to take to get the ECB to move?
Well, I guess you could say it's a difficult juncture for them right now because we've seen the first round of approvals in the Greek Parliament. That's welcome. There's another round coming in the next few days. And then, of course, as you mentioned, there's this debate going on about bridge financing with the need to meet the redemption of the bond to the ECB at the beginning of next week. So they may conclude, until they know where they are on those other factors, they leave the ELA where it is. They probably think they're already being rather accommodating, given the size of liquidity provision to the Greek banks. And, of course, some of these decisions are becoming more and more politicised, which is also rather uncomfortable for the ECB.
Now, everything I've read in the past 24 hours depends what you read, where this bridge financing is going to come from. But it looks like it would appear that it's going to come from one of these bailout funds that existed. Is there any possibility politics could cause this particular, the final hurdle to pay the ECB back? Could that be the straw that breaks the political camel's back?
Well, I think the fact that they've had to go to the EFSM to get the money tells you something. It tells you that there's some room for manoeuvre, but it's rather limited. And there is an issue there, which is, providing the financing to Greece politically is rather controversial. There's a quid pro quo.
Well, in the UK, it's unpalatable.
Well, yeah,
I know it's not part of the euro.
Well, I guess the backstory for the UK government is they were told this wouldn't be used for these reasons. So this fund was not going to be used for financial assistance, and the UK wouldn't be involved in that. So they're being now placated with a guarantee. Yeah. But I think the fact that this is being used, knowing how controversial this is for the countries which are not in the euro area, tells you that it's been a struggle to find the financing.
We've heard Hans talk about Mr. Schäuble, and he made these statements on radio this morning. Achieving a Greek debt sustainability will be difficult, and it's unclear how to restore the Greek debt without a haircut. And obviously that's outside of the euro, or Schäuble exit, as some people were saying. Where are we in this debt sustainability debate? Stephanie Flanders was here a little bit earlier, and she sort of said, look, it's not that it hasn't been on the table, it'll just be in a different form. Yeah,
I think it's really about the form it takes. I mean, the German finance minister's position's been made absolutely clear. We learnt that at the summit, we've heard it again. The German government is in a bit of a bind here because the German government's position has been to require that the IMF is involved in this third programme. But at the same time, the IMF recommendation contravenes the red line for the German government, which is to have a nominal reduction in the outstanding debt. But there is a compromise option, which is in the IMF's recommendations, which is an extension of maturities, a much longer grace period, and to focus on gross financing needs rather than the size of the debt to GDP ratio. So there is a way forward which can give the German government what it wants: IMF involvement, no write-down, but pushing back the issue of debt sustainability and focusing on the immediate financing needs.
Ken, tell me this. Nowhere is anybody... Well, Juncker produced a document yesterday. I shouldn't be so dismissive in regards to mustering some 35 billion euros to help Greece regrow. Greece has implemented more austerity than anybody else in the past 5 years in the Eurozone. They haven't done the structural reforms. How does Greece get back off its knees?
Well, I think you have to separate the fiscal adjustment from the reforms. And I think if the Greek government had conducted itself in a different way, we probably would have had much less emphasis on the fiscal adjustment and much more focus on the reforms. And I think it's fair to say, from the Eurogroup perspective, it is fair to assume that there needs to be radical change in the way the Greek economy is structured. So I think on the reform side, the agreement is understandable and it's necessary. I think the problem is, of course, to make the debt sustainable, the requirement, fiscal adjustment-wise, is so painful after a multi-year adjustment already that there's obviously a debate about whether this is achievable. I mean, it's interesting to look at the comments as well from the Greek Prime Minister in the Parliament when he's now saying he doesn't support the measures which are being put forward.
I was blackmailed. The government does not believe in these measures and will do our best to protect our people. I'll tell you what, if that's coming from the top, why would you pay your tax?
Well, I think that's not a very firm basis for another round of negotiations.
Why would I pay my... Why would I go to the tax office and declare my tax open and honestly the man running the country is telling me he's going to protect me from really harsh stuff?
Well, I think you probably spotted what everybody else has spotted, which is there's clearly an immediate need to pass these measures because the consequence would have been a removal of ELA provision to the banks. But beyond that, if this bridge financing is provided, it's quite likely we're going to be revisiting the terms of the agreement at the summit before too long.
OK, Ken, thank you very much for putting that all in perspective for us, I should say. Ken Wattret there, co-head of European Economics at BNP Paribas.